Most people don't notice it. Most people don't notice it at first. Prices creep up. Groceries cost a little more. Rent ticks higher. Your paycheck feels then smaller, even if the number hasn't changed. And then one day, it hits you. Your money doesn't go as far as it used to. What's actually happening here isn't random, and it's not just inflation in the vague sense we hear on the news. It's something deeper. The US dollar, the world's most important currency, is slowly losing value. And today we're going to break down exactly why in the simplest way possible. Let's start with the core problem. Money only has value because people believe it does. A dollar bill isn't valuable because of the paper, it's valuable because people trust it. They trust that it can buy goods, pay debts, and hold value over time. But when that trust starts to weaken, even slightly, the value of that money begins to fall. And that's exactly what's happening right now. The US dollar is still strong compared to many currencies, but its purchasing power is declining. That means each dollar buys less than it used to. So the real question is, why? There isn't just one cause. It's a combination of forces working together. Let's break them down. First, money printing. When governments need to spend more than they collect in taxes, they borrow. But in recent years, especially after major crises like 2008 and 2020, the US has done something more extreme. It created new money. Trillions of dollars were injected into the economy through stimulus programs, bailouts, and central bank policies. At first, this helps. It keeps businesses alive and prevents economic collapse. But there's a trade-off. When you increase the supply of something, like dollars, each individual unit becomes less valuable. It's basic economics. More dollars chasing the same amount of goods equals higher prices, and that's inflation. Second, government debt. The U.S. national debt is now in the tens of trillions of dollars. That number is so large it's almost hard to comprehend. But here's why it matters. To manage this debt, the government often relies on borrowing more money, or allowing inflation to reduce the real value of what it owes. In simple terms, inflation becomes a hidden way to make debt easier to repay, but that comes at a cost to everyone holding dollars, because as inflation rises, your savings lose value. Third, interest rates. Interest rates are one of the main tools used to control inflation. When inflation rises, central banks increase interest rates to slow spending. But here's the problem. Higher rates make borrowing more expensive, which can slow the economy. Lower rates make borrowing cheaper, which can boost the economy, but also fuel inflation. In recent years, rates were kept very low for a long time. This encouraged massive borrowing by governments, companies, and individuals, and that added more fuel to inflation. Fourth, global confidence. The US dollar isn't just any currency, it's the world's reserve currency. That means countries all over the world use it for trade, savings, and international transactions. But that dominance depends on trust. If other countries begin to rely less on the dollar, whether for political reasons, economic shifts, or diversification, that demand can weaken. And when demand for a currency drops, so does its value. We're already seeing small signs of this, with some countries exploring alternatives for trade. It's not happening overnight, but it's a long-term trend worth watching. So what does all of this actually mean for regular people? This is where it becomes very real. First, your cost of living goes up. Food, housing, energy, these are the essentials. When the dollar loses value, prices rise. Even if your salary increases, it often doesn't keep up with inflation, so in real terms, you're earning less. Second, your savings lose purchasing power. If your money is sitting in a bank account earning little to no interest, inflation quietly eats away at it. For example, if inflation is 5% and your savings earn 1%, you're effectively losing 4% per year. It doesn't feel dramatic, but over time it adds up. Third, assets behave differently. Things like stocks, real estate, and commodities often rise in price during inflation, not necessarily because they're becoming more valuable, but because the currency they're priced in is losing value. That's an important shift in perspective. It's not always that assets are going up, it's that money is going down. Fourth, uncertainty increases. When the value of money becomes less stable, planning for the future becomes harder. Retirement, long-term savings, investments, all of it becomes more unpredictable, and uncertainty tends to ripple through the entire economy. Now, this doesn't mean the US dollar is about to collapse. It's still one of the strongest and most trusted currencies in the world. But strength doesn't mean stability forever, even a strong